Let's talk about money today, currency, and compare an ounce of gold to the dollar to a Bitcoin. Notice I cannot hold up a Bitcoin because that is a global, non-centralized, all-digital currency.
You're going to learn how to profit from things that only make most people poorer. This is Get Rich Education with Keith Weinhold.
Hi, I'm Keith Weinhold. This is Get Rich Education. Why do any of these three things even have value? Why does anyone value those things? And be sure to stick around to the end. I'm going to tell you about the surest win that you can get, specifically what I'm doing to profit by playing one of these three things, gold, the dollar, or Bitcoin, and I'm going to show you specifically how you can do it too. I like short, simple definitions for things. We can think of money as a store of financial energy. I think that's one way to think about it. Why do any of these things have intrinsic value? Intrinsic just means natural to that item. Why are they valuable at all? Well, first, when we think about gold, that has a long track record. It's something that's had value for millennia. The dollar has had value for, say, more than a century. And then Bitcoin, that didn't even exist until about 12 years ago. Largely, it's faith that gives these things value. You can even think of it as what is building the biggest brand, gold or the dollar or Bitcoin. It's kind of a brand building exercise. So when we talk about gold first, since that's been around the longest, it's been said that if aliens looked down on Earth at what human beings were doing with gold, it would be incomprehensible to them, because what humans do with gold is they go dig a big expensive hole in the ground when they mine it, they unearth this gold, they move it, and then they go bury this gold again, like down inside of vaults. That's gotta look strange, it's gotta look crazy. So why in the heck does gold have value? I think conversely, you can also ask the question, what would have more value? What would be better than giving value to something like gold? It's malleable, it's shiny and beautiful looking, it's highly conductive, and gold does not tarnish either. Well, let's look at the dollar. A lot of people say this dollar, it's not backed by anything at all. Like, why would the dollar have value? That's just merely faith-backed. Well, again, faith is important. You know, a lot of people don't even realize this, that the dollar is one of the fiat currencies of the world. The fiat, F-I-A-T, just means by decree or authority. No world currencies are tied to gold or are redeemable for gold anymore, whether that's your Japanese yen or your euro or your peso or whatever it is. Nothing is tied to gold anymore. In fact, it was August 15th, 1971, a Sunday night when President Richard Nixon came on television, and he actually preempted this television show I read called Bonanza. I think it was a Western television show or something like that. And he announced that the dollar was no longer going to be pegged to gold. So we've got about 50 years now without the dollar being redeemable for gold at all. In fact, the dollar used to say on it that it was redeemable for gold. In fact, if you look at a dollar now, it says that this note is legal tender for all debts, public and private, right up here. Yeah, redeemable for debts. If you think it through, if you go to the supermarket and set a pound of grapes down on the counter, for just a few moments you have a debt because you want to claim the grapes as yours, and you handle and service that debt by paying them $4 of those dollars for the pound of grapes or whatever it is. You can say that the dollar is backed by the world's largest military and the biggest fleet of aircraft carriers in that United States military. You can also say that the dollar and America has the world's biggest brand. So these things that kind of underscore this faith and why we use it as a medium of exchange in the United States or your country, whatever currency you use. The US government also says that you need to pay your taxes in dollars. That's something else that helps build and elevate its brand. And if you think about it, you probably think of things through the lens of a dollar standard. When you're thinking about your gold, you think that lately it's kind of oscillated between $1,500 and $2,000 an ounce in recent years. In Bitcoin, people often think about denominating that in terms of dollars when they think about what it's worth. That's why I mean that you think through the lens of a dollar standard, and really I do too. And then Bitcoin, the one item that I cannot hold up because it doesn't physically exist, but that doesn't mean that it doesn't have some value. In fact, some people call it the money of the internet here where we're in the internet age. So when we think about money, it is a medium of exchange, a unit of account, a store of value. It typically has some other properties too that we're going to talk about. Bitcoin is a cryptocurrency. Crypto means it uses a code to access. And we've been talking about currency, but it's really not used as a medium of exchange very much. Crypto isn't really a very good currency. Again, that doesn't mean it doesn't have value. I think crypto asset is probably a more appropriate moniker for what a Bitcoin is. It's transferred exclusively over the internet. Think about how poor of a currency Bitcoin currently is. Again, that doesn't mean there's no value there. But say if the Bitcoin price fell by half in a month, how unusual that would be. Think about your fourplex building in that scenario. If your fourplex building were worth, say, 50 Bitcoins 1 month, then 1 month later, it would be worth 100 Bitcoins. It's not that your property went up in value that much in a month, it's because the Bitcoin value halved in such a short period of time. That's one reason why it does not work very well, very widely as a currency at this point, if it ever does. Let's go ahead and look at some of these traits of money when we talk about these three, the gold, the dollar, and Bitcoin. What is fungible? F-U-N-G-I-B-L-E? That really just means replaceable, where you have a lot of like items. Like you could replace this $1 with a different dollar that had a different serial number on it, and it would work just the same. All three of these are highly fungible. That's kind of a funny sounding word. It sounds like a fungus or something like that. Fungible just simply means replaceable. Neither gold, fiat currency, nor crypto are consumable. They don't get consumed as you hold on to them. Maybe if you would think of a pile of firewood, you would need to consume that in order to get the heat, hence the value from it. But none of these three are consumed. We think about which of these monies, I'm just using the term currencies interchangeably, is what's portable. Well, gold is moderately portable, and the dollar and crypto are highly portable. The dollar and crypto are easily transportable over electronic networks, where gold, at least if you're going to physically hold on to this thing, it's really not so portable. It needs security and storage and things like that. When it comes to what's durable, gold and crypto are durable. They don't wear out at all. Your dollar, that's going to wear out after it changes hands a number of times and it needs to be destroyed and reissued. What's divisible? Gold and fiat currency are moderately divisible. Cryptocurrency can be divisible down to the 1/100 millionth of a unit. That is called a Satoshi, so it's easily and highly divisible. Take this 1 ounce bar and just try to divide it in two, and that's going to be really difficult, and a lot of people would have questions about getting each half of it and wondering if that has any value at all. What about what's secure and cannot be counterfeited? I think both gold and the dollar are moderately secure. Crypto like Bitcoin is highly secure. Again, it's protected by a code. What's most easily transactable with gold? It's not very easily transactable to carry with you to buy that pound of grapes at the supermarket, where the other two are pretty easy to transact with. Dollars and Bitcoin, of course, dollar has the much higher acceptance in the United States. What is scarce? Gold is, I'd call that moderately scarce. The gold supply does increase by 1 to 2% annually. So there is actually an inflation in gold. There is more produced each year than what's consumed. With the dollar, there's nothing scarce about this dollar. In fact, they have been printing trillions of it lately. It's being inflated as it gets a loss in purchasing power. The interesting thing about Bitcoin is that it cannot be inflated. The supply stays fixed. There will never be more than 21 million Bitcoins, and currently almost 19 million Bitcoins have been issued. All of the Bitcoins that are ever going to exist, 21 million, they will be produced by the year 2140. So there is a fixed supply. You can only say that about Bitcoin, not gold or the dollar. Which of these three is sovereign? Which is government issued? Only the dollar is government issued, the other two are not. Of the three, only Bitcoin is both decentralized, meaning there's no central government authority that issues it, and it can also be smart and programmable. The other two can't. Some just call gold a dumb rock. The dollar's not programmable either. You know, interestingly, I don't think you want to stop by saying Bitcoin is a digital currency. It's like a digital dollar. It is more than that. And please understand that the dollar is mostly transacted with in a digital form anyway, so you largely use a digital dollar to transact in your life anyway. Maybe one exception is those bills that you get from an ATM or something like that. But you're already largely using a digital dollar or whatever the currency is in your nation. Interestingly, with the inflation in the dollar, understand that holding on to these things is almost a sure way to have your purchasing power and hence your wealth diminished over time. That's why we talk about investing so much. In fact, a dollar today is only worth about 3 to 4% as much as it was 100 years ago. Put another way, let's take a product that was actually around 100 years ago. Let's say a pack of Wrigley's chewing gum. 100 years ago, that cost 3 or 4 cents on average. And today that would tend to cost about $1 on average. That long-term diminished purchasing power of the dollar affected greatly by this supply of dollars that they keep producing. It is not a scarce resource at all. Now, though there is some ebb and flow, in general, gold holds its value relative to the dollar over time. I think the comparison that you hear most often is 100 years ago, when gold was worth $20.67 an ounce. That pretty much bought you a nice man's suit. And today, with gold's price between $1,500 and $2,000, it still buys you a really nice man's suit. Gold holding that relative purchasing power for you over time is really what gold does. I want to tell you something interesting about gold that you probably don't realize. Few people realize this. Gold has been worth more than platinum for years now. 1 ounce of gold is worth substantially more than an ounce of platinum, but yet you see all these programs and the top tier credit card is called a platinum credit card, but the lesser one might be called a gold credit card. Well, gold has had more value than platinum for a long time. I think companies and marketing plans, they need to flip those things around. Getting back to the dollar, it's an important thing to remember something that I've also talked about quite a bit in the Get Rich Education podcast that I've hosted for almost 7 years, and I've also talked about in some of the other videos. The government has an incentive to produce more of these and to continue to diminish the purchasing power of this thing until it's debased into almost nothingness. There are a few reasons for this. Think about it. The government has close to 30 trillion, with a T, $30 trillion in debt now. Over time, if they could make a dollar go only about 10% as far as it goes today, you dilute its purchasing power that much. Therefore, the government's $30 trillion in debt that they owe to other nations now only has the effect of the U.S. government having $3 trillion in debt. The United States has a huge incentive to keep debasing their currency and creating this inflation. In fact, the Federal Reserve, which creates the monetary policy for the United States, they set their target at a 2% inflation rate. They actually want inflation. You could say with the way that they measure it, inflation is actually higher than that. But see, they don't want consumers to lose faith in the dollar. If consumers realize their dollar is getting debased too much, they might try to get rid of dollars so badly because they've lost, that faith. Let's think about my favorite investment and probably the subject I spent 80 to 90% of Get Rich Education podcast episodes talking about over the years. That is real estate. What's real estate have to do with this? Real estate actually makes a really poor currency. It takes 30 days or more to sell a piece of real estate. Imagine trying to buy your grapes with that. That wouldn't work. The grapes would rot. You can think, however, of real estate as a store of value that holds its value relative to a debased dollar. If you buy a $1 million property and the dollar is debased by half, you've now got a $2 million property. Real estate, a good store of value, but a poor currency to use for transactions. In fact, here's the investor mindset when it comes to a real asset. rather than you thinking about buying real estate in dollars and then having that real estate and then selling that real estate later at an appreciated price for more dollars, that's your round trip there. Dollars to real estate back to dollars. Think of it this way and reverse the round trip. If you want to be a long-term real estate investor, which is where the real wealth is created, think of owning a piece of real estate, transacting in dollars only to buy another piece of real estate. So there, the round trip is real estate to dollars back into real estate. You're really only into dollars quickly in order to transact. That's the long-term investor mindset of a real asset like a real estate investor and how you're using those dollars. You're jumping in and out of them quickly. And by the way, although I'm a substantial real estate investor, I don't know how to fix anything. If there were delaminated flooring or a clogged drain, I wouldn't know how to fix those problems at all. Because I invest in the best markets in the United States, I strategically pick a property where the rent income exceeds the monthly expenses by such a wide margin that I can afford that property manager and still create income from the property. If you want to put a like on this video, you sure don't have to, but I would love it if you would do that. That would give me some good feedback that I'm doing the right thing here for you. And you also don't have to subscribe to the channel if you don't want to, but if you do, I've learned that it helps to click that little notification bell too next to the subscribe area. That way it'll give you a nice, gentle, quiet notification the next time you're on YouTube that I've uploaded another video for you. So yeah, like, subscribe, and hit the notification bell if you'd like to. Well, I told you that among these three, gold, the dollar, and Bitcoin, that I was going to tell you how I use one of these to profit. And what I do is I use real estate to short the dollar. I think among those three, the most obvious bet is that the dollar is going to continue to lose value and continue to lose purchasing power. I can actually harness that energy to my advantage and to be a profiteer when I do what? Well, I don't want to do what the saver does. If the saver saves $1 million in the bank and you've got 3% inflation over time, well, now that saver only has $970K of purchasing power and then $940K after year 2 and so on. I don't want to be a saver. I want to do the exact opposite. I want to be a borrower. But wait, doesn't being a borrower put me in a lot of debt? We'll get to that in a moment. But when I'm a borrower and I have $1 million in debt, now after 1 year, I only owe the bank back $970K in debt. But maybe you're thinking, well, wait, what about the interest payment that you'd have to pay the bank on that? No, in real estate, not only is it easy for me to borrow, but I have also outsourced my debt completely to tenants on that property. Again, I told you that I buy a property where the rent income exceeds all the expenses. One of those expenses is the mortgage principal and interest payment. Inflation transfers wealth from lenders to borrowers. So I want to be a big borrower of smart debt. I think of debt as being smart when it is conservatively outsourced to tenants. That includes the principal and the interest and a little payment on top of that called the cash flow, which is a residual income stream. So short the dollar, and that confuses some people. What sounds a little complicated? Short the dollar, what does that mean? Without getting into all the mechanics, when you short something, you often hear stock traders use this term, shorting just means that you are betting that this thing is going to go down. So when I borrow big for real estate, I'm making a bet that the dollar is going to continue to go down in value. That's the best way to be a profiteer for a long-term methodical strategy, using inflation to profit, where inflation usually makes most people poorer. And by the way, this inflation profiting benefit is one of only 5 ways that real estate investors simultaneously profit, and it's probably the most subtle one, the least understood one, the most minor one. I'm really in real estate for other reasons. This is just an ancillary reason that I'm in real estate. I'm also in it for the appreciation, the tax benefit, that principal loan paydown made by the tenant, and then that cash flow, which is that income stream. This inflation profiting is really that 5th and final one that I'm talking about here. And maybe you're tempted to think, well, inflation's mild. What is this, 2%, 3%? Hey, inflation was 15% in 1980. It's historically low now. With so much dollar printing taking place here in recent years, including last year, when about 1/3 of all dollars ever created were created just last year, a lot of people think we're setting ourselves up for more inflation. So this could be a more substantial factor in your life. Most people think inflation is going to persist. We just don't know what that rate is going to be. But see, someone like me that has a lot of real estate debt, I actually want inflation to be high just for my own reasons. That would actually really help my personal economy. It helps your personal economy when you're a smart debtor. That's where you can benefit. So the short story in how you can be a profiteer, now that you understand money better, is borrow for real estate that cash flows, where your tenant pays your debt for you. This is exactly how real estate investors get wealthy in their sleep. Well, I hope you understand more about what money is by now. If nothing else, hopefully I helped you understand what that is and what I strategically and specifically and actionably do to be a profiteer. My name's Keith Weinhold. Thanks so much for stopping by.
Americans are not saving for retirement. It's going to get worse as people live longer, so you need to think differently, but you can't lose your time. Real estate is the investment vehicle that has created more million and billionaires than anything else. Get Rich Education is one of America's top investing shows disrupting Wall Street. Your host, Keith Weinhold, is a true financial educator and has been an income property investor since 2002. Get Rich Education has created millions in passive monthly income for its followers. Now, Keith has a free book, The 7 Money Myths That Are Killing Your Wealth Potential. Get your copy now at getricheducation.com/book. Invest in what produces income for you now and later. Use the link in the description to download for free The 7 Money Myths That Are Killing Your Wealth Potential. Get Rich Education is on every podcasting platform and has its own native iOS and Android apps. Join Get Rich Education Nation to create financial freedom through real estate investing. Subscribe wherever you listen.